All right, so this is a quick one on trading gold. Um, so clearly you could see from the 4 hour here that gold had hit this breaker block sort of reacted, cleared this inducement with this candle here, this massive rejection that we had here, creating inducement. Some people call it engineered liquidity, right? So gold basically cleared that, tapped into this, and then started pushing to the upside. Now, when we go to the 15 minutes, you can see here that from Wednesday, which is today, around 2 a.m. Asia time GMT +1, gold started, pushing to the upside after returning here to sort of tap into this demand zone. And now around 6 a.m. in the morning, GMT +1, price was around this area. So what we see here, or what we had here, number one, let me just take this out just so that we're clear. So what we had here was essentially this, right, as inducement. So I had this marked earlier as inducement because this was around 6 a.m. thereabouts. So what I anticipated was that gold was going to come back, or price was going to come back, clear this inducement, and then push to the upside. So essentially, either we get a reaction from this breaker block here, breaker block, and also this imbalance below this area. And then if we were to get that, essentially we're going to get something like, let's just say, let me just even take it all the way like this. Okay, just something like this. Okay, just to cover the imbalance you have here and here, in addition to the other blocks. So something like this, we're going to get gold tap into this, and we'll get reaction to the upside. However, that did not happen. This also was another little consolidation, forming an inducement block, but gold did not return to give us an entry. Now, coming to New York session, you can see here that we now had gold give us here a sweep of liquidity. That sweep of liquidity led to this high being taken out, essentially creating for us a sweep zone slash a demand zone. Okay, so the full picture will be something like this. So this gave us a sweep zone slash and a demand zone, and then price returned New York session. Okay, New York session open and essentially tapped into this demand zone and pushed out, from the demand zone. So for this trade idea, we did not have an inducement, right? We did not have any engineered inducement, if you look at it that way, and then price just pushed out. Now this is of course on the 15 minutes, possibly on the 5 minutes we could have we probably would have had something little. So on the 5 minutes, for example, you can see here sweep of liquidity, break of structure, price returned around here, little, we'll say, consolidation around here, which would also pass in certain, because of the time frame, would have passed also as the inducement. So price tapped into that, cleared that, pushed up a little bit, returned, tapped into the demand zone, and then price pushed out. So that was essentially, the trade idea for the gold trade I just played a few minutes ago for doing New York session. So this was the whole trade idea. The entry was about 1 to 3 anyways, so that was the target. So this was it, but this is essentially the trade idea behind this particular trade. All right, so that's it. I hope you pick a thing or two from this. Cheers, and stay talking profit. Bye bye.